10 years ago, the financial crisis began. Banks failed, and the global financial system looked at risk of collapsing. Governments came to the rescue of banks, propping them up with taxpayer money. Could such a thing happen again? Or have lessons been learned? In the European Union, stricter rules were put in place under the supervision of the European Central Bank. They require banks to manage risks better than before and ensure they have sufficient liquidity to stay afloat. And crucially, to boost their capital reserves. To see why this is so important, take a look at this very simplified example of a bank's balance sheet. On one side is the money the institution has lent. If all goes to plan, the bank gets that money back, plus interest. These loans have to be backed up by sufficient capital. This could comprise deposits, such as personal savings accounts or bonds. But technically, neither belong to the bank. After all, customers can withdraw their cash anytime they want. And when bonds depreciate in value, banks write that off. The bank's own capital, on the other hand, includes things like profits it's previously made. So what happens during a financial crisis? If companies don't pay back their loans, the bank loses capital. It eats the loss. If the bank has enough capital reserves, it remains stable. By the way, before the financial crisis, the reserve ratio of European banks was only about 1.5%. The European Central Bank's new rules would increase that figure to up to 15%, but some critics say it should be twice that. If a lot of companies default on their loans, the bank stands to make huge losses. The bank no longer has enough capital, meaning its customers' and business partners' money cannot be secured, and the bank risks going bust. The bigger the bank, the bigger the impact its failure has on the whole financial system. With banks in the habit of lending each other money, one failure could trigger a chain reaction, which is what happened a decade ago. So what can we conclude? Governments would likely lend big banks a helping hand again if a new financial crisis pushed them to the brink, and that would leave taxpayers to pick up the tab.